This is the Leadership in Insurance podcast, brought to you by FinPro Search Partners.
Insurance companies are businesses and they need to look for the long term and be sustainable.
We went from 0 to 1 and now it's going from 1 to 100.
Insurance as a concept, as a kind of service, is brilliant. The execution is what we're looking at now.
I think the companies that are going to succeed are the ones that are going to understand and master the art of intent.
When we talk about innovation, we lean too heavily to think about technology and we don't think about creating a culture of innovation. I think innovation is essentially continuous improvement of existing processes and platforms and product.
Right? It's got to be easy. It's got to be seamless.
Well, good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by Juan Garcia, who is CEO of Tuio. Thanks for joining me. How are you today? And where am I speaking to you from? I've forgotten whereabouts we are in the world.
So thank you for having us. I'm in Asturias, which is a place in the north of Spain. Usually people from the UK would think about Spain in a way of sunny and quite mild-tempered place, but I am right on the top, which is very rainy and very UK-like. So yeah.
We feel at home there. Yeah, we're very very lazy in the UK, and but we've never had anyone from that part of Spain, so that's exciting. I think we've only spoken to Barcelona and Madrid-based businesses so far, which is so obvious. So we're excited, and thanks for joining me on the podcast. So look, before we dive in, we had a really interesting conversation the other day, and I'm excited to have this. So thanks again for being a guest. But lovely if you could introduce yourself and obviously the Tuio business.
Sure. So Juan Garcia, I'm one of the co-founders of Tuio. I tend to deal mostly with growth and product. I have two co-founders. They run ops and finance, and we have obviously the tech leg of the business. So Tuio is a technology company. We aim to transform the insurance sector by offering what we think it's a better option. It's simpler, more transparent, and fair alternative. Those are the three pillars that we try to build our business with. We started 3 years ago with 0 customers. I'm working from Assisses, which is my technical co-founder garage, like any other startup. And today we have about 55,000 customers. They trust us to protect their homes, families, or pets. We define ourselves as a technology company because we believe that we have achieved all these through technology, which allow us to configure insurance products that has a highly competitive pricing, and that we offer a customer experience that exceeds industry standards for a fraction of the cost, which is also important. Just to give a quick note, I am the one that's not in Asturias. Tuio is based of Madrid.
Thank you for that. Thank you for that intro. What I found interesting about it was on the face of it, the differentiator wasn't as obvious, and I think it was really good when you dived into kind of the market segment you serve. But I want to hold on to that fire. So just to get some basics out of the way, it's a MGA model currently, and then you are owning the tech stack behind it and delivery of that. And it's household, pet, and car insurance. Is that the lines of business so far?
We are an MGA. We do everything but the balance sheet, obviously. That's where the MGA has a hard stop. But we do the technology, we sell, we build the product, and we also manage the claims, which are to us the most important piece of the business. Yeah, we currently have house, we have home insurance, we have pets, we have term life, and we are about to release auto insurance. And we believe that, or at least our vision is to just cover all the basic insurance needs. Like other people may have other specialized insurance needs, but probably those aren't for us. So our main vision is just we'll be the one-stop shop for all the basic insurance needs for our customers. That's what we want to.
And geographically, where are you focused at the moment? It's Spain, but latest expansion plans, where will they go?
Yeah, it's all Spain. Our international expansion will come probably end of 25 or 26, and we believe there's an opportunity for us in Southern Europe. There used to be that the Insurtech space in Southern Europe was pretty crowded, but few things happened these past years. It's not so crowded anymore. So we believe there's a good opportunity for us there.
Amazing. Good. Thank you for that. I wanted to talk to you. I thought you had a really hard line on where technology fits within the insurance space. And I wanted to talk to you about that because you kind of said, look, needs to do one of two things. And I thought the clarity around your vision on this was really, really important.
Right. We believe that innovation or technology in general has to solve problems. And the biggest two problems in insurance for us is loss ratio and expense ratio. And anything you do to either control or predict your loss ratio and lower your expense ratio, that's basically the two problems that you have to solve. So most of what we do in terms of AI, in terms of digitization, in terms of thinking around the insurance business, like a software company would think about product, not only insurance product, but also digital product, and how you move your customers under your experience. We work to lower those two. So basically what we think is that if you are able to predict or lower your loss ratio, and you can have a very, let's say, cheap in a way expense ratio, then you can offer a customer the price points they believe they want, and then you can also have a great experience, and that to us is the squaring of the circle. That's what we aim for, because prediction in terms of loss ratio is actually giving everyone the actual price point that they deserve in a way, and predicting that is not easy. And some of the things that we do is we bring different data sets that they're maybe not used by other companies, and we are trying to move from just pricing the risk of the asset to pricing the risk of the asset and the person, which is where most offline insurance companies just have this little breakdown, because they can get all the data on the house or the pet or even the customer if it's life, but having that and having information and data sets about their behavior and why they do things and what's the actual risk profile of that person, that's where we believe we bring things to a different level, and we can have more granularity on the risk profile of the joint asset plus person customer, right? To us, that's the whole customer. That's one thing we do. We try to be more granular in the way that we price our risks, and then on the other hand, we have we try to lower the expense ratio as much as we can, but also having a great experience, and that's where AI, to us, it's a very game changer piece of technology. Not just because of what it can do, because it just represents to us, usually the way you think about technology is that you can either be more efficient with it or you can offer a better experience with it. But to us, AI actually brings both to the table. You can be more cost efficient in serving your customers, but you can also delight them better. For example, we do a lot of, and we can touch on that afterwards when we talk about the customer segment that we aim to serve. We do a lot of text communication and on offline communication. And when you look at that, about 60% of our text interactions are already managed by an AI that we call Leia. We're a bit of one of my co-founders, as I said, is a bit of a geek. So he thought the Princess of the Star Wars could be a great name for LA, right? So I was saying around 60% of our interactions are managed by Leia completely on its own. And it has 15 percentage points of NPS over human people, actually. And that's because it replies very consistently all the time, because it replies very fast, because it's really on time. It's 24/7. So what we see is that it not only enables us to bring down our expense ratio, but also to bring up our NPS, which is basically nothing or no technology that came before it could actually achieve that. So that for us is a game changer technology.
I think it's important to bring in that customer segment as well, because I think just before we hit record, I said, outside looking in, I didn't think it was an underserved segment, but you very much defined a specific type of user, specific type of customer. So just wanted to dig into who that is. Who is this underserved segment?
Sure. Two of us, Jose Maria, who's my co-founder that deals with claims and finance and strategy. Both him and I, we were in the consulting before, and one of the things that were very surprising to us when we were look at insurance is you could see clear, defined cohorts of customers that actually correlated with the different generations, like baby boomers, Gen Z, and now Gen X, and now millennials. And you could see at the same ages, baby boomers would have like 80% penetrations of relevant pieces of insurance. And then Gen X would have only around 65% or something of penetration of relevant pieces of insurance. And now you come to us, which we are millennials. I mean, we are not young anymore. Like elder millennials are around 45 now. So we're supposed to have houses, we're supposed to have cars, but penetrations of insurance in this generation at the same ages is down 45%. So it's basically almost half of baby boomers would have. And we were like, why would that be? It's very surprising, because we still have, maybe there are several things playing into that, but we still have cars, we still have houses. It's just like, why is this happening? And when you look at that and the way we started drilling down on that is just you see that the needs of this new cohort of customers, it's actually well, insurers are struggling to serve them. So the way we define Tuyo is we look at our target customer in a way that it's in between 20 to 50 years old, but that's really an oversimplification because anyone that's familiar with digital tools can easily purchase insurance from us. If you think about someone that orders things over Amazon or has runs content through Netflix or consumes YouTube or their groceries online, right? It doesn't matter the age you are, you just need to be used to that. So what we've seen is that these customers have a very rich digital life. They're used to self-service apps. I mean, if you bank over Revolut, then you basically don't talk to anyone to do anything on your banking app. And what's more important than really your money? There's nothing more important than that. So if you're used to that, then you can get used to anything really. And also, we've seen something else that's very particular of this age cohort or digital rich type of customers, that they're used or even prefer asynchronous or text-based communication. So when you see all that and then you start drilling down into insurance, you see they do a lot of online research. They use a lot of comparison websites to see all the different coverages, to see all the different prices. They look at a lot of product review platforms. If you look at them, at the way they browse, a lot of them go to Trustpilot to see what other people are saying about the products, and all of this gives them a very clear profile in terms of the way they purchase things. They're what we call a value for money segment. It's just not, they don't seek specifically the cheapest product, the best product for the amount of money that they are eager to pay for that. Makes a very clear way of defining this customer. And when we were looking at least in Spain here, when we're looking at insurance companies, we were seeing that since they are mostly focused on older customers and they're more offline, these companies, they tend to rely on expensive marketing. It's obviously TV is the greatest one, and maybe radio here in Spain as well. They do very expensive sales channels as well. It's mostly in person, brokers or agents here. And when you see that there's a complete mismatch in the way that person may behave and the way you want to serve that person. So that's one of the things that we thought was broken. And also when you're trying to serve these people that tend to have lower, like smaller assets, they have smaller cars, smaller houses because they're more urban. This makes that they're not even profitable to the insurance company. So basically you're having a customer that you're not serving very well because they're not at least you're not serving them the way they want to be served. And then they're even subsidized by your more profitable customers because you haven't been able to figure out a way to lower your cost to serve enough, or at least to find a way to serve them to make them profitable. All that together, we thought that it created the perfect opportunity for some company like us, and we really believe that they were underserved by the traditional companies.
Yeah, and I would buy into that because I mean I fit squarely within that bracket. It's exactly who I am, and yeah, I think I am one of the upper echelons of millennials. I think I'm the first year of it actually, so I'm absolutely up that bracket. But you're absolutely right. You've got all these assets, and yeah, something you and I talked about before. There was a couple of things I also want to go back on, but I think that thing about not buying the cheapest product is largely, I don't know if it's ignored or feels like no one's fixed that yet, because I won't buy the cheapest insurance product. Now, obviously, I'm in insurance, so I've kind of got more knowledge of the space. I'm particularly keen on buying really good travel insurance because I travel a lot and I ski and also I'm accident prone. So, I want to make sure that my cover actually means something when I'm away. I've been unlucky enough to be burgled, so my house so I suppose I'm a bit more conscious. But one of the things that I still find insurance hasn't fixed is that I think the lack of clarity around insurance products and our inability to communicate the benefits and the pluses and minuses of how good an insurance policy and product is. And look, some of that is about legal language, and that's almost a problem that's difficult to overcome. But I think it's that lack of clarity is what drives people to be so price sensitive. Whereas I think the lazy assumption is that, people only buy on price and they don't value insurance. So I think they do. But if you can't clearly communicate the difference between insurance products, I'm always going to buy the cheapest one because it looks like they're the same. Is that something that you kind of brought into your thinking, or am I... is that just my theory? That's just my thesis, and I need to build that business.
For sure. Maybe not in ways that we thought about clarity and transparency, linking it to price, we thought that clarity and transparency were completely missing in the space. So basically, what we thought, and this is the way we thought around that. What we thought is that they were a very complex product with a lot of different capability to just mingle coverages and very configurable. And because what we thought around when we thought around that is like, I mean, it made sense because you had an in-person channel that can mix and match all the different coverages and customize it for your customer. When you try to get that to the online space, then that's absolutely impossible to sell. If you have something that's very configurable on the online space, it's very cumbersome, and it's been proven that as many options as you have, as many percentage points of conversion ratio that you're going to lose, because people just get too swamped with different options. And some of the things that we're trying, and we work a lot on our insurance products, only thinking about the insurance product, is that we know that we want to be online and we know that we want to be self-service. So if you take those two pieces, then you have to adapt your insurance policy to make it very clear and to enable that people can buy it by themselves. And one of the things that you need to do, obviously price is one of the greatest signaling pieces of a product, that as much as you can make people understand the product you're selling, the easier it will be for them to say, yes, I'm going to buy this. I'm going to put my credit card details in this website and buy that new that product, specifically when you're starting from scratch with a new brand in a very safety geared space. Because, I mean, you have to trust that your insurance company is going to be there when you have a problem, because what we're selling at the end of the day is just the promise that you're going to be there, right? So what we do, we try to do a lot is we try to be very... Some people would say, well, what we've heard from brokers and traditional competitors, that we sell very basic insurance. I mean, I wouldn't say we sell very basic insurance. We'll sell the insurance that we think you need. So if you have this amount of coverages and you're very clear in the way what they cover and what they don't cover, I mean, it's very easy just to show what you're buying. And we do that in 3 stages. Whenever you're in our onboarding, you can see, and you see your quote, you see your pricing, and you see all the different coverages. We have a first layer of, let's say, human language that says, oh, this is vandalism. Because vandalism is when someone goes into your house and breaks everything off. And we try to be a little bit humorous so people can understand the coverage in terms of, like, when we're talking, right? It's like if you were talking with a friend. Then there's a second layer. If you click into that card in our onboarding, that you can actually see all the legalese, at least not like in the T&Cs, but at least on a more detailed, more in-depth explanation of this is covered, this is covered, this is covered, what's not covered, this is not covered, this is not covered, and this is not covered. So it kind of complements the humorous, let's say, human part of the conversation that you're having with our onboarding. And then obviously there's the third layer. That's you can actually go to the T&Cs and just read it. And we do a lot of effort into clarifying the T&C. So, I mean, anyone, or at least what we believe is that anyone that takes the time can understand our product. And that's something that we work a lot in.
I think simplicity is... It's just such the win of everything that I've seen that's really worked in direct to consumer and all the things that I've enjoyed. Like, I've used a couple of the more sophisticated modern, like auto insurer MGAs and just the ability to, let's be honest as well, like, do it on my phone. Like, my parents are quite digitally happy, but they're going to sit down together on their computer, work through it. If I can't buy it on my phone, I've almost got to the point where I don't want it, and because it needs to be simple enough that I can answer it in that way. You mentioned different data sets as well. Like, how are you bringing those in? What kind of, like, different data point? Well, that you can share. If it's your complete USP, you might not want to, but I just kind of wanted, if there's any examples of how you're putting in different data, because my big frustration, and I moan about this all the time on the podcast, is the amount of data that I still get asked for. And I'm in 2024, and I got sent, and this is by my actually by my small business insurance for the FinPro business. I got asked to fill in, like, what's my company VAT number, what's this number, what's that. It's all available. You must be able to pull that. Like, surely you don't need me to fill that. I don't want to fill it up, and I nearly didn't buy it because I'm that petty. but I don't think I should have to anymore. So where are you getting new data? What data points are you kind of getting to make sure that you're getting those better expense ratios?
Sure. So, for example, in household insurance and home insurance, there is this the cadastro in Spain where all houses are registered. So basically, I mean, we can, whenever you come to our home onboarding, you just start clicking your address, like if you were in Google Maps, and then you start having all the different numbers and different street numbers and different buildings. So you just put in your address, and then we show you, oh, so what stage and what letter is your house, and then you just do that, and boom, we have all your house. You don't need to input how many square meters, where is your street, and which town, and all that. We just use that. Then we use which is the usage that they use for your house, like if you are renting it, or if it's yours, or if you're a landlord, and basically with that we have all the data that we need. We pull from those public sources all the data that we need to calculate your quote, and then also we use the way you behave both before coming into our onboarding and during the onboarding. And this is very, I'm going to show some sort of the behind of the curtain of the Wizard of Oz. Some of the stuff that we do is that we've seen behaviors, the way some people behave in our onboarding, and that actually sometimes tells us that it may be a fraudster, for example. And this is very easy, and I've told them in some other podcasts, so it's not going to hurt us telling it again. But when you see someone that only reads one coverage and goes click, 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 boom, buy, that tend to be that person has already that problem, and he's just buying insurance just to give you a claim. And we've even seen that behavior and people. And one of the things that we do is that our insurance just doesn't start on the same day, it starts on the very following day. So you buy today and it starts tomorrow. So we've seen some people that have shown that behavior, that they've gone really fast on click, 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 click on through the onboarding, and then just read one piece of coverage, and then straight away, oh, I have a claim. Right. So that's one of the things that we do a lot of, the way you behave, the way public data on your house, also public data about you. We've seen that some of the banking scorings that are available, they predict quite well. Also, the loss ratio of a customer is not as straightforward as having that, but it's one of the pieces of the loss ratio as well.
Nice. Thank you for sharing that. One of the things that I found interesting was what you said about the claims process, because an MGA structure, some people manage the claims process, sometimes they don't. I know that you guys have chosen to. And you said that it was related to an informed customer is a better customer, and essentially claims was a bit that allows you to inform your customer. I just wonder if you could expand on what you mean by that and why it was so important to own that part of the process.
Right. So we think one of the main issues of the insurance value chain, and why one of the root causes of why it's so very lowly regarded by customers is that's very broken up. So you have the broker that distributes a product. You have the company that actually markets and designs the product, but doesn't really have any contact with the customer because the customer is from the broker. And then some of the companies have external TPAs that actually deal with the claims process. So basically, it's a very broken up process when nobody really owns the whole end-to-end value proposition of the customer. So it's very difficult to have a very satisfactory process. So what we thought that if we're going to be online, and if we want to have a better product, have a better experience, we need to have all in-house. So we have our own claims adjusters, and we have our own process. And some of the feedback loop that we use is we are able to reduce the loss ratio, for example, because since we have a very digitized claims process, we ask all of our customers, and around 85%, they do actually give notice of their claim through our app. Obviously, there's some 15-20%, depends on the month, that actually is their urgencies and they have to call. That's all right, because that's the service that we want to do. But for all the other different ones that go through the claims process in our app, we ask them to tape what's happening and actually describe it with their own words. So just having that video, it just makes our claim adjusters just has way more information than those of a traditional company. So we don't need to send people to our customers' houses to make an appraisal. And if you think about that, is 100 euros. Well, in between 70 euros and 100 euros every time you need to send someone to a house of a customer. But if you don't have to do that, and a lot of times that visit ends up in a refusal. It's like, oh, this is not a claim that we're covering, but you just spend 70 euros just going to the customer's house and just looking at it and just saying, oh, this is not something that we cover. So for example, just that straight away goes to your loss ratio. Having that video, we avoid having that. And I mean, we still do send people like specialists if we see there's a difficult claim, and as it should be, right? But there's a lot of claims that are really easy to appraise, and we do that through our own videos and through all the information that we have right before we send someone to the house, and that makes the loss ratio is lower. And that only can be done because we think about the whole process, the whole value chain, all linked together, and we have everything in house. For us, that's a very important piece of the information. And what enables us, and that closes the feedback loop, is that we see where we are having a lot of refusals. I mean, refusals is just a natural part of the process, but it's not a very nice experience because you bought something, you're just having a claim or you're having an issue in your house, and then you go to your insurance company and they say like, oh, sorry, this is not covered. And that's not a very nice experience. Well, obviously it's obviously not, because to me that's the biggest issue of an insurer, is just selling something that people don't know what they're buying, and then they just realize when they have a problem that it's not covered, right? We use that to just close, as I said, the feedback loop and get all that information. For example, if you get a lot of refusals in atmospheric issues, right? And when it's raining, it has to rain above a certain threshold just to be covered. So what we do is that we've seen, for example, and this is a real example, we've seen a lot of people, they don't understand these thresholds. So this is something that we're actually putting on video right after they purchase or they quote their house. We think, oh, so let me show you a video that actually is going to explain. We made an experiment, and it was me actually explaining them what's covered and what's not covered. And I was during those days I was a little bit afraid of my own safety when I was walking around. Like, I could see someone would recognize me and it's like, oh, you're the guy that actually refused my claim. But not really. But we used that video and we saw that something that people appreciate, that actually being able to drill down in detail what are the actual issues that we're seeing with other customers and make them understand, like, look, this is the actual threshold that it needs to rain, and we're going to look at it that way. And if it's not, it's just not covered by your policy, and maybe you need to look at somewhere else to just get a different policy, because ours probably is going to make you unhappy. And that's something that we actually bring from the claims side to actually the onboarding side.
Well, that's what I was thinking as we were talking about this. I was like, it really mirrors that simplicity of product and simplicity of kind of process, because it's when people are unhappy with insurers, particularly on the claims process, it's the gap between the expectation and the experience. You know, it's like if you think, oh, everything's going to be covered. Like you aren't, for example, you don't really know what, God, I've forgotten the most basic insurance term ever. You don't know what your aggregate's going to be versus, then you're unhappy because you go, oh, I thought I was going to claim and I was going to get all this money back. It's like, no, you have to pay £500 of this and then we'll pay the rest. It's those gaps in expectations that kind of cause any unhappiness in any service and product. But I think particularly insurance, because that lack of clarity, what have you bought versus what you think you've bought is where people kind of tend to fall down. So makes sense. We're already at time, but I wanted to squeeze one thing in because you've got quite an interesting background. You worked in the communications industry, and there was kind of a lot of kind of learnings there about like embedded, about kind of almost the kind of, I think you described them as like virtual operators, which is like an MGA. Have you brought things across from that kind of experience that have really kind of played into how you have delivered the service that Tuio offers?
If you look at how the telecommunications industry have developed in the last 10 to 15 years, there's this huge boom of MVNOs, just mobile virtual operators. They basically, so you have the traditional operators, the BT or the Telefonicas, which they own both the network and the commercial side of the business. What the industry have seen is that there's been a lot of MVNOs, as they're called. They only do the commercial side and they subcontract the network to these like full-fledged operators like Telefonica or British Telecom. So what we're starting to see, and that's how the first, what we call Insurtech 1.0 started. It's like it started as an MGA. And MGA is, to me, the way I thought around it when I started looking at insurance is like it's basically the same thing. It's just that you just don't need the regulatory capital to just set yourself as full insurer, because there's people that they do have the licenses and the capital, and they just want to write more business. And the way you can do it and to innovate very fast and to tap into that VC money that they just don't want to have it over there just getting dust in some account like the regulation in insurance require. Then you can set yourself up as an MGA, and then you can innovate on the space and then tap on that capital that other insurers have. And that's what we are. And that's we think that's a model that probably will push the industry forward. I mean, it's already done it. We think that we are in a way Insurtech 2.0, and we can tap into that. But even then, Insurtech 1.0, the Hippos and the Lemonades of the world, even though they are now insurers, like full-fledged insurers, they started like MGAs, and they proved that you could do things different and you could do things more user-friendly in insurance. You can use internet to just sell product and to think differently about your relationship with customers. And to us, and that's now where most of the fully fledged insurers are moving, because they've seen that it actually works, and you can have a better experience in insurance, which still is not the case in all countries and all insurers.
It allows you to focus on not the regulatory issues and focus on the customer. Selling insurance to customers that either are underutilized or undervalued or underrepresented is absolutely the right mission.
We think it's very difficult. Obviously, I don't want to trash traditional insurers. We think one of the things that we think is that it's very difficult to do well two things at the same time. So either you innovate in the customer side, or you are doing very well compliance, but doing both at the same time is very difficult, especially if you're growing very.
No, I completely agree. In fact, I would discuss this for ages with you, but we've definitely got a cool time. Juan, so thank you so much for your time. I think it's a really fantastic kind of revisit on actually what insurance is trying to do is really simple. But I think where you guys are kind of doing something really interesting is the simplicity of the flow of that and matching that kind of promise to the claims process, particularly. And so I'm really pleased to see it, and want to have you back in a year's time when we're talking about maybe expansion to Portugal, Italy, Greece, or whatever might come next. But thank you so much for being a guest on the Leadership in Insurance podcast.
Thank you for having us, or me.
Thank you.